Ladies and gentlemen, thank you very much for joining us for this opening panel discussion, high-level panel discussion on making markets work for growth. We've had fantastic opening remarks which have indicated that capital markets are not just about money, but about people. And I think that that is going to be the premise of the next hour. It's about people, it's about trust, as President Paul Kagame so eloquently put it a moment ago. It's about technology, and it's also about integration. Making markets work for growth. Let me introduce to you our esteemed panelists. To my immediate right, Clever Gatete, he's the Minister of Finance and Economic Planning, the Republic of Rwanda. Jindong Hua is the Vice President and Treasurer of the IFC. Chicha Ramkrishna is the MD and CEO of the National Stock Exchange of India. We're joined by Yong Wan, who is the Deputy CEO and EVP of the China Africa Development Fund. By Beno Ndlulu, the Honorable Governor of the Bank of Tanzania. And we're also joined by Ethiopia's Tafara, the Vice President, Corporate Risk and Sustainability General Counsel for the IFC. We're going to start by getting each panelist's view on whether markets are more effective than aid. And if I may start with the Honourable Minister of Finance and Economic Planning, Minister Gatete.
It will be very difficult to take one or the other, but I believe that they complement each other. For countries that are developing, which still need assistance, you also still need aid. But that aid should be a transition to make sure that the market can take over. Because there are a lot of needs, sometimes that cannot be solved by the markets alone. But in the long run, what we would expect is that the government should remain, I would say, as a regulator, assisting the markets to make sure that they function, but then allowing the markets to be the ones to mobilize resources and to make sure that they drive the economic development. So we need both, but one complements the other. And aid is needed at the beginning, but as you grow up, of course, the markets becomes very important.
Jindong, if you can weigh in.
Yes, indeed. If we can broadly define aid, that would be international community support from multilateral development banks, the IMF, bilateral donors from OECDs, then aid is very important in terms of being the catalyst supporting emerging market countries in helping them building the three infrastructures that is absolutely needed. But to sustain that, for a country to develop a virtuous cycle to achieve full economic potential, that three infrastructure is also critically important. That is social infrastructure, physical infrastructure, financial infrastructure. I think obviously the focus of financial infrastructure, especially capital market, because as a country develops its economy, accumulating wealth, we need a mechanism to efficiently recycle domestic and international savings denominated in local and regional currency. And only through a fully developed, vibrant, deep, liquid market, that is financial capital market, can a country achieve its full economic potential. So aid is important, financial and capital market are equally important.
So Chicha, a balance between the two when you are a developing economy.
I'm going to give you a little long-winded answer on this one. Markets cannot really work on their own. They need an integration and pipe into the ground level productivity in any country. I come from the land of Mahatma Gandhi, and Africa and India share him in common. And he taught us some very simple lessons on something as big as how to get freedom by spinning a wheel. And the hub and spokes model of that wheel is really what I think counts for how you can connect ground level productivity with the economic prosperity of any country. The hub is the economy, and the spokes are really the large, unorganized, small and medium enterprises that keep the different sectors in an economy chugging. Any hub can be successful if the spokes are finely tuned, work in synchronization with each other, and give the speed and momentum for the hub to realize that prosperity. And that is really the experiment that I think appropriate economies like us, like Africa, should bank on when we think about creating capital markets. And capital markets are not just for the big, glamorous board listings where we can compare ourselves with all the rest of the boards in the world. So my small point here is, and this is an experiment which India is working on in the last 1 year, the Make in India campaign, which right from the Prime Minister is being driven in the country, has taken 10 sectors, uses each sector as a focus cluster, and around that cluster, the focus is on what policy can do to bring the spokes to be working in a momentum and succeed. This will showcase the sector as globally competitive and at the same time do all that is required from finance, marketing, policy, etc., to ensure that the SMEs are unshackled to be able to add to that overall prosperity. And I think a similar thought process and theme for a continent like this, which is maybe a Make in Africa, Make in East Africa, Make in Rwanda, but identifying the key sectors and galvanizing the SMEs by going to where they are, finding the right intermediaries who can help them build the governance model, as many of my earlier speakers mentioned, and make them world-class is at the heart of making the capital market work appropriately in different economies.
Young, let's get the view of the China-Africa Development Fund, sir.
Yes, I'd like to go back to the statement just made by Minister Kagame. I think it is true that, at least to myself, I think the relationship between the market and aid is something supplementary to each other. And my institution, as one of the initiatives of China-Africa Forum on Cooperation, FOCAC, I think it's just something can illustrate the relationship between the two. And we always say that the mandate of this fund is to promote Sino-African cooperation relationship by direct investing African market on the basis of market. What does it mean on the basis of market? That means we always identify business opportunities based on the merits of the project per se. That means we always identify those projects who are technically and financially viable. So in the past 7.5 years, we have committed investment on 80 projects in 35 different African countries. And this money, from us, is $3 billion. This $3 billion generated has driven $16 billion from China to African market. And this is something I would like to further illustrate that by this, I shouldn't say pure market activity, but it is some kind of private equity business activity who can fulfill the mandate to promote Sino-African cooperative relationship. And this kind of promotion can be more sustainable. Why more sustainable? Because it's based on the market, it's based on the feasibility. So jobs created, foreign currency generated, export expanded, and as an investor, we also sustain ourselves. So this kind of approach can be more, the long-term beneficiation to both sides. I think I like the topic of this panel very much. It's just touched the essence of the relationship between market and growth, the relationship between market and aid.
And it's fitting that we move to you then, Governor Ndlulu, market versus aid, the relationship from a Tanzanian perspective.
I think it's very clear that the potential that financial markets have to mobilize resources can dwarf aid by far. I'm saying this for three basic reasons. One, it's very clear that Africa actually is a net creditor to the rest of the world. African debt is about 275 billion. The forex reserves that we invest outside alone is 544 billion. So certainly, and there's a lot of work that has been done recently, a lot of the same money actually gets recycled back as loans to our own countries. So to the extent that we can make financial markets function to intermediate our own savings to be channeled to investment in the region, I think the capacity of markets is huge. The second example I'll give, in a span of only 10 years, remittances have grown sevenfold coming to Africa. By 2012, they reached 57.4 billion. That's more than ODA. And this is leaving aside the illicit flows that everybody refers to. So my answer is more in terms of how to exploit the potential that we have in order to channel these same savings into our own region. And aid is always, of course, a good complement, and aid that leverages markets to work well, I think is aid that will sustainably be getting us to sustainable financing.
Thank you. And Ethiopia, just in terms of your addition to the topic at hand, but before we go there, I must admit the way that you distilled the topic at hand today by indicating that capital markets really are a market where trust is the essence and that it's investors' capital at stake and that you've got to get to know the minds of those investors. I think that was a very, very appropriate way to basically shape the discussion that we're going to be having for the next 2 days. And to Dr. James Mwangi, obviously, congratulations on the cross-listing, sir. It's all about getting to know your mindset from an investment perspective. Ethiopia, so if you can weigh in.
So I don't think it's a matter of one being better than the other. You need aid and you need markets, but I think it's key to make sure that one doesn't substitute for the other. Aid should not substitute for the market. If you look at just the infrastructure needs we were talking about in Africa to the tune of 48 billion, or the financing needs of corporates to the tune of 140 billion to 170 billion, aid is not going to be able to meet that challenge, right? So you have to create a market, a trusted market, with clear rules, with transparency to intermediate between private capital, and there's a fair amount of it out there, to be able to meet those challenges. So they're really complementary, as many have said, just making sure that one does not substitute for the other.
It's obvious that Rwanda is embracing the development of domestic capital markets, as we've seen, led by President Paul Kagame. I do need to come to you, Minister Gatete, on a point that I raised with President Kagame in Davos, and that is that potentially your move to bolstering domestic capital markets has been pushed by the occurrence in 2013 of the temporary suspension of aid, which had relatively severe consequences for the Rwandan economy that has enjoyed 7 to 8% growth for a decade, falling to below 5% from a World Bank figure in 2013. Do you feel that there has been further motivation to fuel growth in domestic capital markets as a result of that temporary suspension of aid?
Yeah, thank you very much. Indeed, Rwanda, at the time, 2013, we felt we are ready to go to the market, as the President has explained. Before you go to the market, of course, you have to make sure that all the fundamentals are quite clear. The macroeconomic stability was there. We've been preparing for quite a long time. Today, Rwanda is a B+ rating. And when we went to the market, we didn't want to go to the market just to borrow money that to use in the general budget. We went there for specifics of saying, let's invest this money in income-generating activities. The money we are looking for was make sure that we pay off the debt that we had, which was very expensive for the airline, for the energy 28 megawatts, which is now on the grid, and also for the convention center, which is now being constructed. So it was very specific for activities which are crucial for our economy, but also which are income generating in nature. We went looking for $400 million US, and we had a subscription of 3.6 billion US dollars. And it was highly, highly subscribed, and the trading went very well, which shows confidence really in the leadership that we have that is leading the economy in terms of stability. But that is the government which is borrowing to make sure that it makes its own contribution. What also wanted was the private sector side to make sure that they can also play a role in the development process. And that's why after establishing the capital market here, we've had so many companies which are listed. We are also issuing licenses for the SMEs to be able to get some financing also to participate. We have educated the Rwandans on the importance of savings, especially by investing in some of these products. And the reason why we did this is that it's not always that you have to go to the foreign markets, when actually you can also raise the same money here, because we are doing two-track, raising money on the international market, but at the same time issuing the bonds. We have a calendar for the whole year, issuing on the domestic market. The issue which Governor Nduru mentioned, which is very important, is that all the money, whether it is from the reserves or the money that we have from the insurance, from the pension, or even the banks are keeping some of their forex money abroad. When actually, if our markets were well developed, then it means you have the products which can help actually keep this money here, but also attract more money that can be used by all sectors, from the large companies to small ones. And here, what we are saying is that we need both the government to invest, to encourage the capital market to raise money, but at the same time, we need the private sector also to have access to this money. The government is using it for certain purposes, but also the private sector is a big partner in economic development.
Jindong, if I can get you to come in, looking at the proactive nature that Rwanda is dealing with, mobilizing the domestic capital markets, and of course Tanzania represented here as well today from an East African community perspective. What about other governments in Africa? Because you've made that comment that the momentum is growing, Africa's on the global stage, but governments across the board in Africa need to invest in developing domestic capital markets. Beyond what we're seeing in the East African community, what are you seeing out there?
Thank you for that very pertinent question. But let me first of all say that from IFC perspective, as part of the World Bank Group, with the ultimate goal of eradicating poverty and build prosperity, our entry angle is supporting private sector. Because that's where, through entrepreneurship, through creation of jobs, a country can be on a growth path. So as a treasurer, I think the story is very simple. When we support a local entrepreneur who generates revenue in its local currency, it makes sense to support them, funding them in local currency, so that that entrepreneur can focus on growing its business, creating jobs, instead of worrying about volatility. Obviously, at a macro level, how you can efficiently recycle domestic and international saving is a macro story. On both fronts, in our conversation with African Minister of Finance governors, this is a very well accepted story, right? So at a conceptual level, we have had no difficulty, in carrying out a conversation. However, for capital market to take off, you need a lot of building blocks, from plumbing, in terms of stock exchange, clearing settlement, custodian, to market convention, to regulatory framework, the legal framework. There are many, many building blocks. So therefore, our goal in setting up the Pan-Africa Domestic MTM program is to identify those countries that are almost ready, where we can put in our request and working with the government, working with the capital market authorities, working with the investment bank and commercial bank community to work towards that goal. Now,
Are you starting to see execution in other African regions
Indeed.
beyond the talk?
So given that it takes process, right, from regulatory change to modification of pension regulation, so since we have set up the program, we have successfully issued in Nigeria Naira, we call it Niger bond. We have already issued in Zambia, we call it Zambezi bond. And the case of Zambia is quite interesting. Right after we issued, we got a lot of reverse inquiry. Now they say, oh, I see. As a AAA issuer, you can tap the domestic savings. Can we actually take advantage? Actually, we were able to issue and support a local corporate in their bond issuance. So I think it is a virtuous story, but it will take a bit of time.
Chitra, Jindong spoke to me before we started the panel discussion and said we need to get you to come in on small, medium enterprises and how they can tap into capital markets. Perhaps you can leverage what you've done with the National Stock Exchange in India to reform capital markets in that territory.
Absolutely, and my opening remarks really led us into the theme of how we truly believe that we need to address the financing needs of small and medium from the market directly if we want them to get the benefit of efficient financing. But this is a little counterintuitive, and therefore, whenever you look at market development and you look at perhaps developed markets, you're starting at the wrong end of the stick, because it's really the main board and the large billion-dollar listings and the glam around that and all of this. But frankly, for a lot of the economies in this room, and for us, 50–70% of GDP is coming from the SME. So what is it that we can do to disintermediate or to create the right intermediation for the SMEs' capacity building and enabling them to deliver better, not just financing, but to also be able to deliver better in terms of productivity? So there are two learnings for us from our experience. One, as Jindong mentioned in his remarks, capital market is not just about creating the board and waiting for the listings. It's really about going out of that comfort zone and creating an ecosystem. So for example, do you have enough credit rating agencies that can help the SMEs, that can bring the kind of credit enhancement that an SME needs when it goes out to raise capital? Second, do you have enough intermediaries who can help engage them in a meaningful dialogue with institutional investors, whether private or public, so that part funding needs of theirs can be raised from the institutional investors, and that always works as a huge endorsement when the SME goes out to raise capital? Third, what kind of policy nudge do you need to ensure that this predominant dependence on bank financing is somewhere segued and nudged out so that SMEs can actually go out and think about other options? But the most important in this piece we found was that there are not enough financial advisors and intermediaries who are local, who understand the SME business, and who can from inside out help the SME to mature, to come to a point where they can raise either debt or equity capital from beyond just banks and formal financing needs. And our engagement with, so we try to identify the top 10 investment banks are never going to be doing this business. So how do you create this class of intermediaries who will help the SMEs on one hand and who will make them of a class where the trust governance is not at a deficit, whose financial statements are transparent, and investors have the confidence to go and put money into those issues. So this is the kind of ecosystem work that we are engaged in, and we think will make a difference.
I think what Chitra said is very important. I think for SME and capital market, innovation is really the key. That is not the traditional instrument. For example, I think under Chitra's leadership, the National Stock Exchange has a very innovative bond structure that would allow the issuer to match cash flow of the bond with project financing. Normally, these two are very different. And therefore, when we issued our debut domestic bond called Maharaja, we are able to take advantage of that. And then, so that gives us a flexibility in financing some solar power projects so that our bond would match the cash flow of the project financing. So I think when she mentions about going out of the comfort zone, I think innovation is a strong point because we need to cater to the specific needs of SMEs.
Young, if we pick up on what Ethiopia said earlier again, and that is about getting to know the mind of investors out there, is it as easy as people think to find investment opportunities in Africa?
Yes, we do. People say
Does
that.
it come with challenges?
Yes, challenges is obvious, but let me tell my personal judgment. It is obvious that at this moment, investing African market is really risky. It's true. But at this moment, if you stand off investing African market, you are more risky. In China, people are saying that within this decade or 15 years, when you look at world economy, you look at China market, Indian market. But after 15 years, when you look at world economy, look at African market. So just now you guys talking about SMEs. Today we are talking about growth, development from financing perspective. So for us, my understanding is for SMEs, the key point for financing for them is debt service. So we have a special program, $3 billion for SMEs of African market. And at the same time, I mean, I shouldn't say more important, but at least the parallel, the development of African economies should pay much attention to bigger projects. I mean, from policy perspective, to well-designed plan the national economy, especially for the structure, for the comparative advantages of this economy in the world market. So I would like to express such a kind of idea that we as a foreign investor, we really look forward to further improvement of investment environment and more clearly and systematic of policies towards foreign investors and to make a better match between foreign investors' identification of business opportunities with the national social and economic development plan. So when we visit the African market to talk about investment with our African counterparties, I always say that, please let me know what are those priority projects from government development plan perspective. We would like to directly respond to those opportunities because if we correctly respond to those priority projects, we can have policy support from the government and most importantly, in most circumstances, those projects are most viable from the market perspective. So that's my point.
I'm going to add to what you said there, that it's more risky not to be in Africa, with another quote that I found from you, and that is that China's an aging population. In 2040, Africa will be the new manufacturing center for the world. So I think that perfectly sums it up. Ethiopia, so let's come back to you, sir. Issuers and investors have a lot of choice. We've heard the endorsement there from Young that it is very risky not to be in Africa. But is Brand Africa doing enough? You look at the other emerging market stories out there, some would say potentially the Africa growth story is waning. World Bank forecasting 5.2% GDP growth across the African continent. You're sitting with India pushing upwards of 6.4%, even higher, and then China still in that 7.4, 7.3% growth rate. So again, investors and issuers have choice.
You know, we at the IFC spend a lot of time dispelling misperceptions, right? We go into markets that others may not go into, knowing full well that the risks, they're there, but they're not as great as they're perceived to be. And by virtue of going in, we hope to actually then crowd in others to come in behind us and invest in these markets. But more could be done to provide clarity as to what the risks are and what they're not. And I think there is this perception that Africa may be riskier than is reality. But that's part of what the job is, right? Right now, I think there's a critical role for us to play in making sure people understand what the risks are and what they're not. As we're having this conversation, and the minister and I were talking about this yesterday evening about financing for development. Part of the challenge is actually de-risking investment in Africa, but also being clear as to what the risks are not.
I'm going to move on to integration of East Africa capital markets in terms of the next theme that I think we need to concentrate on. But I do again want to open to President Paul Kagame. So,
allow me the privilege to be unconventional in this discussion. You started with a very provocative question, which really was, I think, intended to have us thinking beyond what we are used to. And in this case, I think the panelists have gone along the lines of things we are used to. And I start with the point you made when you were asking the question of preference between the markets and the aid. And I think there was grossing over the problem, and people saying, you see, we need both, and it was as if there was none that was better than the other, and so on and so forth. This is a blunder. Number one, first of all, this question can only be asked in Africa, not in any other region of this world. Which in itself tells you that there is something wrong even with the way people are arguing the case. Because it is now a given that aid and capital markets, are the same. You see, it's not, you can't say you don't need this. I mean, first, aid is more political than anything else. Markets are less political, markets are neutral. Look at the rest of the world. The only thing you're talking about, why you highlight aid, sometimes that to the point that if you say anything about aid, it may be used against you. You see, this is the only place we can be having this conversation. But at the same time, the panelist from Tanzania has made a good point. He illustrated all kinds of wealth lying all over the place from Africa and being recycled to us in a form of aid and then, in the end telling you, you must be humble, you must keep quiet. Don't say some of these things. I mean, what are we talking about here, honestly?
Mr. President, do you want to come take over the moderation, sir?
So I think I have to come in early a little bit before the others so that maybe they try and change their arguments a little bit and move in another direction. So, yes, let's not be diplomatic, let's not gloss over issues, let's not, markets are markets. We know what they have for us, outweighing what we have in aid by thousands of times, please. So why do we leave something here that we know is more important for us by any measure and account? And then we start saying, no, but let's not even make a comparison. You see, we need both, Okay, so I rest my case.
I'm not sure if you're allowed to admit this as a financial journalist, but what you've just witnessed is why President Paul Kagame is hands down my favorite president on the African continent. Well done.
So, Your Excellency, if I could respond indirectly. So I had the good fortune working for the Chinese government in the 1980s, working on one of the first Asian Development Bank financed project in China. At that time, China was just opening up, yeah? And we used a lot of aids, broadly defined. It's not just grant, it's loans, concessional or commercial, whatever it is. I think being new to international finance and to external aid, I think in the case of China, took the attitude of as we learn as much as possible, but we, as a national government, at each ministry, it has to fit with our priority and strategy. So when the two work in tandem, it's terrific. For example, I think the World Bank Group supported the Shinkansen, the bullet train of Japan. So helping with their infrastructure project. Later on, Korea, China, and India, and all the other countries. But I agree with you. Aid is catalytical. The amount can never be enough. And we use aid as a foundation to build a sustainable financing structure supported by market. And that is the ultimate goal. So,
are you going to change a politically correct statement earlier, Young?
You talking to me or him?
Talking to Young. He made it. Oh, you both grabbed. I see. Everybody's coming to the fore. Mr. President, you certainly should be standing up here.
Okay. If I may, His Excellency, Mr. President's remarks made me ask myself, for this fund, are you political or you're neutral? Actually, His Excellency, you are one of the initiators, three initiators of 4CAC Beijing Summit. And we are one of the outcomes of that summit. So it's quite obvious that this fund is political outcomes of political events. But we are an investment firm. We do business like any other firms in the world based on market principles. I should put it this way. In terms of a business model approach, we are a company. It's neutral. But in terms of a background and mandate, we have very strong political strengths. Now, how to make that two combined? Number one, the major difference between this fund and other PE firms in the world is we focus on long term. So we do not pursue to get exit within 3 or 5 years like any other PE firms. We always say that we can wait 5 years, 8 years, 10 years, as long as the market grows up. And secondly, as I mentioned before, we are a bigger risk taker. So we think we have identified a good approach, a path that we would like to lead the FDI in this emerging market from a world perspective.
Ethiopia's?
So I didn't realize it'd been as diplomatic as His Excellency suggested. In that my view is, quite frankly, the development challenges that we see in Africa will not be met by aid. It's going to require private capital. 48 billion in infrastructure gap per year in Africa, aid is not going to fill that gap. The same is true for the financing for corporates. So the challenge we face is actually creating an environment that makes that private capital comfortable to actually flow to these countries. And it's a particularly challenging time for that. You see this flight to safety that's taking place around the world from the investor standpoint in light of the uncertainty in the world. So our challenge at the IFC, all of us in this room, is to actually create the environment of safety, a feeling of safety, such that the capital will flow not only to Europe, not only to the United States, but consider flowing to emerging markets as well.
Donna Oosthuizen, Director of Capital Markets at the JSE Limited. Eleni, if I could just get you to hand over the mic there. Thank you.
Thank you very much, Bronwyn. And I think those of us sitting in the audience may have detected a slight change in perception since His Excellency President Kagame mentioned the power of markets. And what I'd like, it's a question actually, Bronwyn, it's not a comment. My question is, if we all agree that there is a very important role for markets to play, what is the constraint? What's holding us back from actually doing more to develop the markets in our countries in Africa?
There we go. I think, Donna, I've had a very easy job today between President Paul Kagame and yourself. I think that's a perfect closing question for each of my panelists to come through with closing comments. So I'll actually move right down through with Minister Gateti starting.
Yeah, thank you very much. I just wanted to highlight that the point the President has just made is really touching on the risk. If you take, for example, the aid money that is coming in and the risk that is involved, and the markets and the risk that is involved, then you'll find that actually within the aid, the risk is very high. Within the aid, in the case of Rwanda, as you mentioned right from the beginning, in 2013, we had done everything right in terms of all the agreements of how the money was supposed to be used within the government. But still, the givers of the money decides to stop the money, despite doing everything right. For the market, usually once you do everything right that is required, the trust is still there. That means they cannot all stop at the same time unless there is something else. And that's the point he was trying to really, that risk is heavier when you're using the donor money. And that's why the point that is made by Georgina, which is very, very important, is saying, how fast can we build the market so that it can take over to avoid the bigger risk, which can, in our case, it really affected in so many ways. We started seeing people speculating, and it had an impact on the private sector, on government. So the risk is very high compared to the money that we are supposed to be getting. And that's why it's urgent that building this market and doing everything right at the country, at the regional level, at the continental level, is very urgent and is very crucial for us to avoid the bigger risk.
Jindong, if you can add to Donna's comments there that we identify developing domestic capital markets are crucial for sustainable growth. What is holding us back?
So I think there are two forces at play. On one hand, we know by definition, working in any market, but I think perception or reality, working in emerging markets, things are not perfect. If one has a mentality that we need to wait for everything to be perfect before we come to the market, then nothing will ever work. On the other hand, take IFC, for example. We are an internationally rated AAA institution. We have our standard before we can issue, but recognizing that we also have to take some risks, just like entrepreneurship, not gambling, but educated risk in terms of look at markets that are almost ready, working together by putting our money where our mouth is, whether through real investment or bond issuances. And that process is a process where we work together in improve it. So my final call to regulators, policymakers, Minister of Finance and Governor, is that we look forward to working with each of you in all the countries in sub-Saharan Africa from the basis we have rapidly building a roadmap. And we like to see a vibrant capital market where we can have our issuances everywhere. But that is not the end goal, right? That is only the beginning. You want to start with a AAA issuer to get investors comfortable. Then you have AA, single A. Eventually, we want to see local entrepreneurs tapping the capital market and recycling savings. And as the ECP has said, that $48 billion, connecting that with over $90 trillion savings in OECD countries, that would not be a very difficult job if we build that roadmap. So that's our commitment from IC.
Chitra.
So, when we think about how to make markets work, at the heart of this is, where is the pipeline for capital raising coming in, right? And in this, again, there are two categories. And this actually goes back to the comments that His Excellency made as well, which is that do you get fresh money to create investments which eventually will come onto the market and be marquee listings, or do you already have maybe unorganized but investments in businesses already in different parts of the economy? And really, my take here is, while this is not this or that, most of us have unorganized investments in the form of small and medium that exist in different parts of the economy already. And to me, therefore, transforming this as a pipeline into the capital market gives that vibrancy for the pipeline of investments that the market can actually work with. And on the other hand, where is the demand coming from? So, of course, my co-panelists talked about retail savers and bringing them in, but it's also about bringing domestic institutions in. And again, there is a role for policy here. And it's not really about financial assistance, but it is about how policy can nudge, whether it's provident fund money, retiral money, etc. If it's local savings, then their bet on the local investment capacity creation has to certainly be there first. So what can policy do to let us say, channelize some of the local savings from the demand side into the market? These two are actually very important ingredients for any local capital market to really take off. And then to answer the point that Eleni also very effectively made, you see, it's not a sequential program of how to make the capital markets vibrant in any country. There is a lot of building blocks. And in some of these building blocks, either the private sector, public sector partnerships, either through an exchange mechanism or through some of the institutional investors, can create that capacity. She very effectively talked about the certification program, for example, credit rating. Third, she talked about the audit. It's actually spot on. Because when we try to create the capacity for SMEs to bring financial statements that are trustworthy, this is exactly what we are doing. We are working with accountants, we are working through the institute. Sometimes it's a challenge to make this regulatorily possible, but then can you define your own subsystem of standards so that if people want to participate, want to get empaneled, they will pipe up and sort of reach those standards. This is really, therefore, the small point that I want to make, that assistance serves a purpose of catalyzing some activity, but your pipeline demand and supply has to be addressed. And as long as SME is not just a good thing to be talked about and forgotten after that, it's not like climate change. So we need to be more committed to what we are talking about. Then it works in any country. But I think the challenge is therefore how to translate that into ground level policy.
Thank you. Young.
Development of capital market is obviously very important. While FDI deserve special attention. I think most of the people believe that industrialization is the correct path for development, for growth of African countries. And FDI, it is only FDI can, increase the self-development capacity of the local economies. I'm not saying that only FDI is the important thing, but I call on special attention to this one. How can make the market play better to absorb more FDI? I think in the first place, we cannot simply rely on market and to wait market automatically function. We need policy orientation. We need a balance between market forces and national policies. We need a systematic systems to direct foreign investments. And secondly, I think the information exchanging is really important. What's the purpose for information exchanging, like the event of today? That is, we need consensus. We need confidence on the long-term development of this market. So I would like to take this chance to express our appreciation to the governments of Rwanda, to the governments of other African countries for the support of our business in the past 7 years. And I also like to express that we would like to hand-in-hand cooperate with IFC and other international institutions to lead the investment to this market, to show our confidence to the long-term development of this market.
Governor Ndulu.
I think the starting point has to be the point that His Excellency made. It has to be in the change of psyche. Knowing that we can use markets actually to raise the resources that we need for development. The mentality of dependence is something that has been with us for a very long time. I'm not saying that markets will solve everything, but I think a fundamental point is that even where public sector involvement is concerned, we can look for resources in the capital markets. We don't have always to go back to the aid part of this. And this, fortunately, Your Excellency, things are changing. It's very, very evident in the region now. First, we are using technology much better to try and reach sources of financial resources that before were not at all possible. And this is reflected in the financial inclusion drive that, across a number of our countries is very clear. It's also reflected in all these initiatives that we are making now to use external non-concessional borrowing in order to help us finance, to a very large extent, some even of the key infrastructure. We know in sectors like telecommunication, the private sector is doing it on its own. But there are some sectors, like road, transport, railway, where government participation has to be significant. But money doesn't have to come through aid. Government can mobilize that money through the same markets that we are talking about. So I think we have begun a journey, but that journey is still fettered by a long history of depending on aid. But the journey, I think, has started in earnest. That's my optimistic view.
Ethiopia's?
So I think the gating issue has been touched upon by Eleni and Chitra, and that's the ecosystem. In my experience, the ecosystem is waiting for somebody else to take action, usually waiting for the government. And rather than thinking what each of them as market participants might be able to do to build the trust and confidence necessary for the market to work. So auditors and accountants they can take it upon themselves to make sure that the audits are done with quality and that the accounts are transparent. Rating agencies can take it upon themselves to demonstrate to the market that the information they're providing is unbiased. Rather than waiting for somebody else to actually take action. If you think about markets around the world, many of them existed long before there was a regulator, long before any one person took action. And I think getting the ecosystem to look at itself and think about what it can do and not wait for perfection, as Jindong said, is what's necessary to unlock capital market development. Right now, people are sort of static.
Minister Gatete.
Yeah, thank you so much. I wanted just maybe to come back to the topic that you mentioned for the region, and also touching on what Mr. Nduru has just mentioned, which I think is very crucial, that you had started talking about it in the region, whereby as we create the market, the role of technology, as the President mentioned in his speech, is now very, very crucial. We've been discussing at the regional level in East Africa on how we can interlink the markets so that using technology, then at the end of the day, it ends up becoming one market. We have engaged at the level of Rwanda, the NASDAQ, to be helping us in terms of using their technology as they are doing it in some other markets. And we believe that maybe a discussion on that would be very crucial on how this can be done right so that we can this time look at it in terms of trading, interlinking the markets. What Professor Nur was mentioning, in the banking system now we have the East African payment system, whereby the payments now becomes much easier and you can pay in your own currencies. But also trading using the same platform, whereby there is settlements in each of the countries and the trading can be done from any country. If we can really work on that to make sure that at least initially we can try to trade within the region and then trying to see how we can create the regulatory environment that now can allow not only the trading within the region, but also bring in money for others who are coming to trade on this market. In the case of Rwanda, we have already started some reforms whereby anybody, there's no discrimination for anybody who wants to trade on our market, for anybody who is buying any shares at any limit, for anybody who is trying to own any kind of shares, there's no limit. And here, if we can create really the environment, which will be good, that means that we can be able to mobilize the resources from the institutional investors, the pension, the insurance, the individuals, but also attract the foreigners who would come to the market if we can really be able to work on that kind of regional integration within the capital market.
Ladies and gentlemen, a warm round of applause for my esteemed panelists today. And I'm going to do protocol right this time, so if you could all please stand for His Excellency President Paul Kagame of the Republic of Rwanda.